Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A shooting star pattern yesterday, though the jury is still out whether it is a type 1 bearish or a rarer type 2 bullish. Personally, I usually favour type 1 unless proved otherwise. Prices were based on the combination of the April 2020 low at 107.25 and on the top side of the breached upper time currently at 107.18 of the late December 2023 to early March 2024 bearish shift pitch fork. Further down, we still have that support in the 106.66 to 106.68 zone. Looking topside, we have a tight band 107.67 to 107.93 where most of the moving averages live. Overall, the market is still outside and below the dark blue highlighted mid-April to late June ascending expanding wedge pattern. This ascending pattern is quite interesting as it is attempted to being a transition pattern for the move up and out of the bright red shift pitch fork. Or the original bright red shift pitch fork. But ended up getting sucked back into the main pattern instead. Admittedly, the downside primary target for a break lower out of this wedge pattern, well, that's already been achieved, and it leaves a much harder secondary target X below down at 106 even. Now, I have demoted the highlighting of the late December 2023 to early March 2024 bearish shift pitch fork and instead highlighted in bright red the early March, early June bearish Andrews pitch fork, as I think it has now more relevance. This one is a little steeper, and the upper time currently at 108.14 may have the benefit or possibly the curse of having the medium and long moving averages currently 107.92 and 107.93 respectively, having them nearby. So far today, a reactionary move lower, down to test to and below the April 2020 low and now the old upper time. A cable, a shooting star pattern type yesterday, but it could also be seen as an indecisive spinning top. The base of the action was on the mauve highlighted flatlining medium moving average, currently 126.42, and the rising green highlighted short medium moving average, currently 126.35. These two are part of a wider congestion zone between about 125.69 to 126.72, possibly as high as 126.99, and consist of the following: the slowly rising long moving average, currently 125.71, the 50% Fibonacci line of the July to October 2023 move at 125.90, the green highlighted and slowly rising short medium moving average, the mauve highlighted flatlining medium moving average, congestion at 126.72, and the 50% Fibonacci line of the June to 2016 to September 2022 move, plus the September 2020 low, both at 126.99. The peak of the rise yesterday was just over the combination at 126.99, though I suspect the real influence on top was the overhead bright red July 2021 to date downtrend, currently at 127.28. Overall, late 3 weeks ago, prices broke down and out from the dark blue highlighted April to early June bull channel, which morphed into an ascending wedge pattern, thus giving a primary target X in the 125.65 zone with a secondary harder to reach target X1 in the 121.80 zone. Now, so far today, a move lower below both the medium and the short medium moving average. The next support is at last week's lows of 126.10 to 126.17, and then the 50% Fibonacci line of the July to October 2023 move at 125.90. Euro sterling. A second higher but still indecisive spinning top yesterday. There was also a fourth bullish white soldier as well. The market based itself on the April 2021 low at 84.70, which had been capping the market in recent times. The top side was capped in part by the upper trend line of the June-based rising wedge pattern that's currently 84.94, but mostly by the late May to early June congestion that had made a bearish halfway hesitation between roughly 85 even to 85 and a quarter. Overall, the last 2 to 3 weeks have been a reactionary move back up from the market reaching its potential down at 84.30 from the May to June based bearish halfway hesitation. The market is now within an unhighlighted rising wedge pattern, currently 84.50 to 84.94. Now, I've kept it unhighlighted as I thought to do so would make the action clearer rather than obscure the moves with thick lines, thick crayons. So far today, an open but still within the a slightly higher open but still within the body of yesterday's action, and not seemingly trying to head lower back within that rising wedge pattern, but really not going anywhere at the moment. US dollar against the Japanese yen. A second higher bullish white soldier yesterday after the previous session's indecisive spinning top. That was also a key reversal up. It was the highest high and highest close since December 1986. The base of the action was just above the congestion zone, consisting of the May 1990 high at 159.61, the May this year high at 160.04, and the April 1990 high at 160.34. Just for guidance, we have a lot of gaps up here from back between April 1990 and the December 1986 high at 163.36. The top of the market was capped by the dark blue highlighted middle time, currently 161.93, of the recent March to May bullish shift pitchfork. Above that is the purple highlighted middle time, currently at 162.47, of the older February 2022 to January 2023 move. This purple middle time had capped the market at that high of 160.04 in late April. Now, so far today, a slightly higher open and a slightly higher high, though nothing to write home about as yet. US dollar against the CNH, the offshore Chinese yuan. A bullish engulfing pattern yesterday after the previous session's indecisive spinning top that could also be seen as a bearish double and a key reversal down. The long suspected rise in this market continues to happen, though remarkably slowly, but it is still building the beginnings of a June-based bull channel, currently 728.90 to 732.5. Down below, we have the previously mentioned congestion zone between 724 to 727 even, within which sits the rising short medium moving average, currently 725.69, and a dark blue highlighted upper trendline extension to the January to April ascending triangle, currently at 724.17, and now the rising medium moving average, currently 724.28. Now, looking topside, well, the next topside resistance of note is the mid-November 2023 high at 131.06, which ties in with some earlier congestion in the 731 area. And that is not that far away. Now, so far today, a move higher, making a new recent high and towards that 731 even area. US dollar against the Mexican peso. Day 2 yesterday in a 2-day meeting lines pattern that is traditionally and empirically seen as a bullish 2-day pattern. The downside was once again supported by the steep dark blue highlighted middle time, currently at 18.24.41, of the early April to mid-May bullish Andrews pitchfork, while above we have the capping action, at least on the closing basis, of the February 2020 low at 18.51.71, which aided the capping action seen in early June. I would like to put once more the following idea in front of you of the possibility of the action from 2022 to date as potentially a huge double bottom pattern idea. We're now, after the rise during May, June, and even now in July, despite the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 low at 18.51.71. As this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive ones, consecutive monthly closes over this level to confirm such a long-term potential move higher. Now, prices claimed close to doing this in June, but failed to make that significant high close. Thus, it'll be interesting to see what the month of July may bring. So far today, what looks right now like a bullish opening white Mariposa as prices move up towards the key February 2020 low at 1851.71.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.